G'day folks, welcome back to another update for Bitcoin. Now the overall trends on the monthly, weekly and daily are bearish, but just watch for that small bounce on the hourly on the chart. We'll go through that in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel. As of today, April 1st, Bitcoin's fundamental outlook is influenced by several key factors. Institutional demand and the post-halving supply reduction have contributed to price appreciation, with projections suggesting a potential rise to $200,000. However, recent market volatility, partly due to new tariffs imposed by President Donald Trump, has led to a slight decline in Bitcoin's price to $82,199. Additionally, the Trump family's involvement in launching a new stablecoin, USD1, introduces competition that may impact Bitcoin's market dominance. Despite these developments, Bitcoin continues to be viewed as a store of value, though it struggles to match gold's safe haven status due to its volatility. So we always look at the long-term trends first. And here we've got the monthly, the weekly and the daily. So on the monthly, you can see on the price, it's still above its moving averages, although notice the CCI is broken below that moving average range. So that's a weakening sign, and the price is retraced somewhat, but nothing too dramatic yet. On the weekly, that's also bearish on the CCI and the price. It's broken below the respective moving averages. But notice here we had lower highs on the CCI versus higher highs on the price, and that was a bearish divergence, and that actually pulled down and hit our minimum range. And that minimum range goes from that high to that low, and that low is measured before that divergence started. You can see that's at 23.38% level. That's a minimum retrace, and it's gone as far as the 50% level. The CCI is still declining, so just be cautious of that. I won't be going long anytime soon. The daily likewise, it's hit this resistance up here at 108.263. Hit it twice actually, so it's a double top. We did have another bearish divergence here that broke and hit it down below our target area, 23.38% level. Fluctuated for a while in that range, and then it's finally broken further to the downside. We had a bit of a break to the upside here on the daily above the CCI and the price, but then it's broken down again in the last few days. So bearish momentum at the moment as well on the daily. Now if we go to the intraday charts, so we only take trades in the direction of the higher time frame. So in this case we go short in the direction of the daily. You can see here we had another bearish divergence, and these are all independent from different time frames. That broke down into that 23.38% range, so we would have drawn a bit of Fibonacci bit in that range there. So it's hit that 23.38% range, bounced, and then broken through further to the downside, and it's gone right down near the 100% retrace level. Now you'll notice here on the hourly, we've got a bullish divergence, higher lows on the CCI versus lower lows on the price. And I've drawn a 23.38% target range there. So that will go from that low, and we take it back to the high, significant high back there, and that's at 23.38% level. It's already hit that range. Now it's making further upside. It retraced, and it's going back into that range again in the last hour as we record. And again, we don't know where these stop actually, so this could actually continue further to the downside. It could actually bounce down again, or it could go a lot higher. We can't really tell where it's going to stop, so we take it one step at a time. But at the moment, you would go short primarily if you're trading on the 1 hour. So wait for this to break to the downside before taking any short trades. I wouldn't be going long until we saw the daily also break higher as well. So what we have here is the back test, and I've got the stop loss approach at the top here, the profitability and the profitability of the average down approach. And the trading strategy is the same as what we look at here on the daily. So just demonstrate here on the daily. So whenever the price breaks below the moving average of the price chart and the CCI breaks below the moving averages, that's where we go short on the 1 hour time frame. The same logic there applies. So we only take short trades when the daily here is trending short. So you can see there I would have taken the first trades there on the stop loss and the average down approach back here when the price broke below and the CCI was below. That would have been a bit too early to go short there, even though the CCI was low, because that could have bounced higher and kept going further to the upside, and the CCI could have adjusted. So we wait for the price to break below the moving averages as well as the CCI. So that's where we started the back test. Now, where I've got these crosses marked, that's where you would have theoretically have, or you should have closed out your positions, and that's marked by each of these points where the CCI breaks into that moving average range. So each of these little retraces back into the moving average, you would have stopped each of these trades, and then you would have restarted again short positions when it broke down again below that moving average range. So having let it go throughout the whole period, overall the stop loss approach has generated 5,890 so far, and the average down approach has generated 184,562. Now that's assuming you let it go throughout the whole period. I'm not suggesting you do that. I'm telling you to close out the positions once they hit those moving averages on the daily. So here are the backtesting or trading parameters. So if you're trading on the 1 hour time frame, you invest per trade 1 contract, the first contract entered, and you average down limit of 15 contracts. So basically the contract entries, the first one is 1 contract, next lot is 3. You've got a total of 3 contracts now running. Add another 4, you've got a contract, 7 contracts running. Add another 8, and then you've got a final of 15 contracts maxed. And every time you average down, you make sure it drops by at least 0.005% for a 1 hour trade or contract parameter. If you're trading on the daily, the average down is 5% decline. Now, trading shares is very similar. Invest per trade $1,000 per trade. So you invest first $1,000, next lot is $3,000, next is $7,000, and finally you got the max of $15,000. And again, average down by 5% if you're trading on the daily time frame, and take profit of 3%. If you want to follow the traditional stop loss strategy for trading CFDs on the 1 hour time frame, you invest 1 contract per trade, take profit of 0.003% or 3% for a daily trade if you're trading on the daily time frame, and a stop loss is when the CCI 150 turns into the moving averages. Likewise, if you're trading shares, if you're trading on the daily time frame, invest per trade $1,000, take profit is 3%, and again, stop loss when the CCI 150 turns into the moving averages. Obviously, you can invest more than $1,000 in any of these trades, but you've got to be very careful of the your money management and your account balance. And I've limited it to 3% take profit on the daily and 0.003, the equivalent for the 1 hour time frame, because I found if you make it too high, in other words, if you aim for a 5 or a 10% gain, often you're a lot longer in the trade than you really expected, and it just gives you a lot more turnover when you're the smaller take profit return.
To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.